Good day, fellow investors. Moeller Maersk stock is down 55% from the January 2022 peak. And as it is an essential lifeblood business for the world and the way we live in, given it's the largest container shipping business around, and it is also a great thermometer for the global economy depending on the demand for shipping, I have put Maersk as a covered stock on my research platform, which means that I'll be watching it, updating it, and seeing when is the best time to buy a cyclical shipping company like Maersk. Of course, if you look at the recent news, given the issues through the Suez Channel, now ships have to deviate, go around Africa, and what was a 26-day trip is now a 36-day trip. This has increased containerized freight prices from the lows of the end of 2023. Those prices have tripled to the current level. But when you look at the news and you look at the supply wall of container ships coming into the market, then the supply-demand imbalance going forward will depend on how long will that disruption last. Even if the disruption lasts 12 months, from Q2 2024, the container shipping sector will again be in oversupply. If the disruption lasts 3 months, then it will be much sooner, and we are in a large oversupply situation already by Q2 2024. Of course, these are temporary, hopefully temporary impacts on the situation, but the price of Maersk and everything is related to the supply and demand for shipping, trading, container shipping globally. And with or without short-term impacts, the supply and demand scenarios look ugly in 2024 and 2025. No scrappings yet. Orders are still online. However, the change is that future orders are down already 66%, which means that somewhere in the future, the cyclical shipping industry will reach its bottom, which will then again lead into a deficit, undersupply, higher prices, and higher stock prices. But let's now dig into Maersk and what the company is. Of course, the key here is ocean shipping, but they have been expanding into logistics and services, and they also own terminals. And as these are all commodities, the key are the prices there, and they are now guiding in 2024 to lose more than 5 billion of cash flows, not make any money at all during the year. And if you look at the EBIT, you see that it already went negative in Q4 2023. Now in the conference call, they discussed that Q1 2024, due to what's going on in the Suez Channel, could be just a break-even, but their outlook is bad going forward. And here you can see the huge difference between earnings in a good year. They made 6 billion in 1 quarter of 2024 compared to EBITDA of just 200 million in the last quarter of 2023. And that is also having a huge impact on cash flows. 6 billion in the last quarter of 2022, 27 billion over 2022. That went a negative 1.7 billion in the last quarter of 2023. So how to value a business that will lose $5 billion this year and very likely also next year? It is impossible to just put it into a model, but then you look at the value of the assets and what is there. If you look at their cash and bank balances, 6.7 billion, short-term deposits, 12.8 billion, they have 19.5 billion in cash, which is something staggering with the market capitalization of 27 billion. To have that much in cash means that they will likely survive the storm coming. Of course, we cannot expect similar distributions as in the past, to put it in dollars, 13 billion over the last 12 months, which is half of the current market capitalization. But things will normalize eventually, but first we'll have a few bad years and then you will see improvements. But the question now is when to buy such a business. And you can see here that 2016 commodities crisis, shipping, China, 2019, 2018, again China, 2012, recession, Europe, the Great Recession, and then also the repercussions of the dot-com bubble that lasted till 2003. Buying at these bottoms usually meant a double in the next few years as there was the recovery side. It boomed after and during the pandemic, which was, what is this, almost 5x. Now we are down and now we have to see when will the next cycle boom. For now they say it won't happen in this and next year, but you never know. Especially if there is a recession, things will get even uglier than now, where we don't have a global recession but still oversupply in the industry, which means that it might get even uglier. As a value investor, I'm looking at the previous bottoms and around 50% from the current stock price, you hit absolute bottom where the value of the assets should sooner or later lead to improvements over time. So we need market pessimism. Even if at current levels, I think that the stock is a great buy, a good buy for pension funds, institutions that are looking for quality, diversification, long-term business durability and safety. I'll keep watching this. I wanted to point it out for you. If you want to look at a relatively safe, no debt, little debt, high cash, cyclical, necessary business for the global economy as is, you can follow it forward, or you can check my research platform and follow it with me over time. Thanks for watching. I'll see you in the next video.